Hello, everybody, and welcome to a special episode of the Professors of Profit vlogcast. I'm your host, Dr. F Scott Feil, and I've got with me today a non-clinical guest who actually will be a huge help to most healthcare clinicians. I have with me today Chris Varela. Chris, tell us a little bit about yourself and what you're doing these days.
Yeah, so my name's Chris. I'm a financial advisor. The business or my business is Varela Financial, which is a financial services business that focuses entirely on helping graduate professionals like physical therapists with their student loan repayment planning. So that's the type of financial planning that we specialize in.
Yeah, I honestly obviously I wrote a book on it, right? PT Educator, Student Debt Eliminator. And I had this idea in mind that, you know what, the hell with it. I'm just going to take responsibility for my loans. I'm going to take ownership of them, and I'm going to pay them off as quick as possible. I'm going to take large chunks of money from all these side gigs and side hustles that I'm doing and throw it at my loans until they're done. After talking with you, it's kind of changed my mind a lot, and it's really changed my view on things. And then that's why the second edition of the book is now coming out, because there is more than one way to skin a cat, and that method works for some people. But for me, I think the biggest thing was kind of driving down my overall monthly cost of my student loans, stretching out over a long period of time, and then figuring out the best way to invest to pay that forgiveness part when it comes up in 20 years or so. So, I got a couple questions here that people have been asking on my Facebook group. I've had a couple people shoot me messages on Twitter. It's come from all over the place. But the first question that I have to ask is, why should somebody choose to work with a certified financial planner or a financial analyst? And, how do they find somebody who knows about this stuff, especially when it comes to student loans?
So that's two different questions, right? So it's tough. I would say if you're just doing general financial planning, like it's not going to be that hard to find a CFP or a CFA. But you have to understand it's not just the designations are not as important. It's the specialization that is important. I'm not a CFA, I'm not a CFP, and I don't think I'll ever pursue getting those designations. Quite frankly, it would take a lot of time, invested effort, invested money to get these designations. So there's a high value in having these, but that doesn't translate to expertise. It just means that they invested time, money, and energy into getting a designation, right? So that's the first piece. And like, if you're doing general financial planning, like, yeah, they'll be able to help you out with a lot of that stuff, or like retirement planning, general wealth accumulation, general family protection, like et cetera, right? But if you're looking specifically for financial professionals to help you with your student loans, you want to find somebody that specializes in that. Like a generalist financial planner is not going to know all the ins and outs of how to pay back student loans. Quite frankly, there's CFPs at our firm that I have very, very, very high respect for, but if I sent them one of my clients and said, what would this person do with their student loans? Without doing a ton of research, they probably say, yeah, interest rates are really low, so a private loan could make a good sense, and just could do a 20-year term or 25-year term, free up cash flow. It's like, that's just traditional. Like that's just generally how people handle student loan debt. But Scott, you and I know this because we've talked, and again, with the hundreds and hundreds of PTs that have come through our doors in our business, PTs do not fit a general financial situation. It's an interesting industry, right? There's not a lot of PTs out there that we've talked to that have like a little bit of debt. It's either they have like no debt at all, or they have a mountain to climb. And for the people that have a mountain to climb, the traditional repayment strategies are just not going to make sense. So kind of a long-winded answer, but I would say don't focus too much on the designation or the letters next to the name. There is value in that for different things. But if you're really looking for proper guidance on how to handle your student loans, you have to talk to a financial professional that specializes in that niche type of service, because that's where you're going to get the most value.
Yeah, I mean, one of the big takeaways from our conversations, and not just ours, but I've seen it a lot out there, is do not take out a private loan to try to pay down your student loans. I've had a couple of my students that have gone through my courses that have been really stuck because they turned their government loans into private loans and got in a lot of trouble with that.
Yeah, it's an important point to hit on, because people often ask me, what are the biggest mistakes that you see people making? And there's a few, and I would say the top two. Well, I would say the top one is that people probably take financial advice from the wrong people. Obviously, no one does that on purpose. But people, they go to family members, they go to mom, dad, brother, sister, cousin, aunt, uncle, whatever. They talk to colleagues. Sometimes, unfortunately, it is actually a financial advisor, but they're just not suited for their individual scenario. So that's one of the biggest mistakes, is that they take advice, or they seek advice, which is the right thing to do, but they take it from the wrong person, which is not the right thing to do. But that's hard to weed out sometimes. The second biggest mistake is exactly what you said: refinancing high levels of federal student loan debt into a private loan. It's a crippling mistake. You take, basically, you're basically putting yourself in from, hey, I'm in this situation where I have 10 different options, but instead I'm going to go with this option over here, where now I literally have one option, and that's just to constantly refinance over and over and over to try to get lower payments and lower interest rates, or just try to wipe it off as soon as I can. It's very limited when you do that. So I remember, even when we talked about a year or so ago, if it might have even been more than that, Scott, I think at that point, a lot of what I was pushing on social media platforms was just trying to get that message out there and say, stop refinancing all these federal loans into a private loan. It's, if you Google how to handle student loan debt, that's going to come across all the time, and that's a problem. So I felt the need or an urge to just take it upon myself to just get the message out there and help people understand that is not. It's not that it's a bad option. There's so many other options. You have to investigate those options to understand what your scenario looks like within those options before making such a strong financial decision like refinancing into a private loan. So yeah, it is one of the bigger mistakes that people make, and hopefully with us doing stuff like this, we can prevent some of those mistakes.
Yeah, that's my biggest mission, I think, and you share that with me, is just trying to help people pay off these student loans, whether it be that method of just paying it off as quick as possible, or more realistically, paying it off as efficiently as possible. And that was really the mindset shift I had. But you talked about a great point earlier, that the federal loans have a bunch of different methods out there. And that was the next big question that's been coming across my radar, is what are these different types of repayment plans? I know, we don't have to go into too much depth on all of them, but just give us a little list of some of the different types of repayment plans out there.
Yeah, I mean, it's a loaded question, just because I know too much. There's so many options, and every single individual option has its own little characteristics and mechanics and logistics and etc. But yeah, high level, I mean, look, if you have federal loans, if we're talking federal loans specifically, there's standard repayment plans, and there's three of them. There's like the standard 10-year plan, there's the extended graduated plan, or the extended, and then there's also the graduated plan, which I would say if you're a PT out there and you have 6 figures of student loan debt and you're on the graduated plan or the extended plan, get off of it. But yeah, those are the three standard plans. And when I say standard, those are just like traditional. So that's where your payments are going to be based off a combination of principal and interest and what pays the loan off in X amount of years. On the flip side, though, there are these non-traditional repayment plans called federal income driven repayment plans that work very different. I refer to them as non-traditional because your monthly payments have nothing to do with principal. They have nothing to do with interest. Your monthly payments are only based off of a percentage of your discretionary income, so not even your full income. And you pay into these plans for either 20 or 25 years, depending on what you qualify for. And if there's anything left over in your loan at the end of that period of time, it would get completely wiped out and forgiven by the government, which is good news, right? And it is good news, but it is a taxable event, right? So every single penny of principal and or interest that gets forgiven on these plans would get added to your final year's income statement and counts as taxable income. So you have to pay taxes, you have to pay income tax on those dollars. So that's where this idea of this loan forgiveness tax bill comes into play. So with these forgiveness plans, it's really important to understand there are two costs with these plans. There's your monthly payments that you make on the front end every single month for X amount of years. And then there's this, basically it's this check, it's this tax bill, it's a check you have to write to the IRS when your loan gets forgiven. So there are two costs, but these costs do work different from one another. So what I mean by that is when you make a monthly payment on your loans, you're always going to pay 100% of those dollars. So the example I give is if your payment's $100 a month, you're going to pay 100% of that, which is obviously the full $100 monthly payment. But if that same $100 monthly payment got forgiven on the back end of your loan, all you have to do is pay the income tax on those dollars. So if we just, for the sake of conversation, let's assume a 30% tax rate, you would have to write a check to the IRS for $30 in place of that $100 monthly payment, which in this example is a savings of $70 or 70%. The percentage is probably the better way to view it. So the best way to utilize these plans, and this is what I help people do when they come through our doors, is I help them understand within their own scenario, one, does it make sense to seek these plans? And if it does, I help them understand how we can create a strategy to minimize their monthly payments and actually seek the maximum forgiveness for their case, but then create a strategy, a saving strategy or a wealth accumulation strategy for that tax bill so that we can accumulate what they need so they don't have to save it dollar for dollar. So those are really the different options if you have federal loans. You have the standard plans, and there's 3 of them, or you could use a federal income driven repayment plan. There's 4 of those. And then the last that I would mention that I'm not going to go into too much detail in is the public service loan forgiveness plan. And the reason I say that one for last is because it's never the first one that I use, because then people stop listening. Because a lot of people, there's an assumption out there that people think that the public service loan forgiveness program is the only loan forgiveness plan that's out there. And that is a massive misconception. It's not the only loan forgiveness plan. There's 4 others besides that. And in reality, step 1 of qualifying for public service loan forgiveness is being on one of the 4 federal income driven repayment plans, right? So the way that I actually explain it to people is that the public service loan forgiveness is actually like an add-on to a federal income driven repayment plan rather than the other way around. And I think people need to understand that relationship there. And unfortunately, most people don't.
Yeah, I think, you've hit a lot of the highs and the lows of all these different plans. I think that, that's a good overview for sure. And I think, again, the big thing here, we're not trying to, pick apart and really get into detail on all of this stuff because it's going to be different for everybody. And we'll talk about that next, but just at least bringing awareness to these different programs and realizing that, oh, okay, there's many different options. I need to find which best suits me. And that's really my next question that has been coming across my desk is, how do I know which one is best for me? And I know that, you and I talked, and it's a very personal kind of situation. It's different for everybody. So I'd love to hear your advice on that.
Yeah, every case is different. And unfortunately, this is a really hard thing to do yourself. You can do it. It's just going to take a lot of time. It's going to take a lot of research. It's going to take a lot of headaches. Because just earlier today, I was talking to a PT, and they were basically, I was like, what made you schedule the call? And they were like, well, I've seen your content, I've done my own research, and I get that, like, I know the income driven plans are going to be in my best interest, and I was going to try to do this myself, but every plan seems the same to me, and I don't know which one to choose. And it's crazy because at a high level, they're all under the same umbrella, but in reality, the logistical or the mechanics of how each individual plan works in comparison to the others is drastically different. So when you're mapping out this, it's not just a short term and trying to say, hey, this plan gives me the lowest payment, or this plan minimizes my accruing interest, so I'm going to go on that plan. You can't do that. You have to understand what your individual scenario, not just current situation, but also your future situation with increases in income, family size, et cetera. You have to understand what your current and future situation looks like over the duration of these plans to make sure that you're actually on the right one. Now, how do you do that is what your question is. It's really hard to do yourself. There's a lot of repayment calculators out there that I'm quite frankly just not a fan of, and I've used them, and some of them they're just not accurate. Not saying that they're going to be off tens and tens of thousands of dollars, but they're just not as accurate as some others. So the one that we use, and we're also self-branding our own and building our own, that just takes into consideration everything over a 20 or 25 year period of time. You really have to go through some type of consultation process to really understand that. It's the same thing. It's like, what would be a good analogy? This feels negative, but for whatever reason, this is pointing out to me. And like, if you're going through a divorce, you're not like, if spouse 1 is going to hire a divorce attorney and spouse 2 is just going to represent themselves in court, the one that hired the divorce attorney, they're probably going to have a better outcome because they have someone that specializes in that situation, right? Rather than doing the DIY. Another example, you could probably Google how to redo a roof and how to redo shingles on a roof. That doesn't mean that you should do it. I think this type of financial planning is the same category. You can do it yourself, but that doesn't mean that you should. And I think that some people, that's going to be a hard thing to get over, because we're all taught to like, some people were taught to like, hold your finances, keep it personal. You don't need help. You can research, everything's out there. And it is just like anything else, especially look at the internet. Anything you want to learn how to do is out there on the internet, literally anything. That doesn't mean that you should though. I think there's something to be said about professional guidance. So to, again, another long-winded answer, but to really figure out what your best option is, I think you have to get professional advice. You have to get second eyes on it. You have to go through the process where somebody can, in an hour to an hour and a half, get some data from you, get some facts from you, and say, these are your 7 to 10 different options. Here's your most cost efficient option. Here's the option that fits perfectly with your financial goal. And once you have all that information from there, now you can make a sound decision, but it does take some time to get there. It's not an easy thing. This isn't something where you're going to research it for 45 minutes and figure it out. It's also, unfortunately, not something you're going to research for a month and figure out. Like it takes time, and there's a lot of legislative risk too. So you have to understand what could potentially change within government decision making that could affect your plan. So that's another side of it as well.
Yeah, for me, the big takeaway is just, I pay the experts, for what I don't know or don't know well enough, right? Or even if I'm pretty decent at it and I just don't want to do it, I outsource it, and that's just, something that comes along in the business world, but it's okay to use in your personal life and your financial life as well. It's just, like you said, finding the right person to get you there. So
another good example, and I was just trying to think of a PT specific, but like if I have a client who works with professional athletes, I think that's awesome. If I was in the field, I think I would like to do that. So let's say that's one client. And then let's say I have another client that is a pediatric PT. And let's say that I have a 1-year-old daughter that just got early signs of hip dysplasia. Which one of those PTs does it make the most sense for me to go to? Does it make sense to take it to the professional athlete? Like, probably not. Probably makes more sense to go to the pediatric.
Exactly.
Specialization matters. It matters. It matters. It matters. I can't push that message enough. So kind of going back to even like the CFP, again, like credentials are great. Designations are important. There is a lot of value there, but that doesn't mean that person's qualified for everything that is going on within your situation.
Yep. I love it. So the final question that we have for today is one that personally I like, because it kind of incorporates some of the stuff that I started doing. But once you've got your repayment plan picked out, you've got your blueprint for what fits you best. What are the next steps that you have to take, in order to then see that plan through and really follow it through? I mean, obviously for me, I say, take my course and work with me and let's build some wealth so we can pay this stuff back, right? And start investing. But what would you say is the next step that they have to take in order to see this plan through?
Are we talking specifically with the federal income driven repayment plans?
Yeah, I think so.
Yeah. So basically I've never actually done this in just one verbal run through, but basically step one is when you find the plan that makes sense, you have to go through the student aid. Well, the best way to do it is to go through the studentaid.gov website, sign into your account. And I can even visually, I'm like understanding how to click through it. But basically you go to apply for a federal income driven repayment plan, which is under the lower my payments section. And you go through the application and you go through this application. It takes like, I don't know, we'll say 10 to 20 minutes. And it just asks some basic information about income. Are you married? What is your spouse's income? How do you file your taxes? Family size, if I didn't say that already. Name, address, etc. Right? So it's basically an application that gets sent to your loan servicer and the government that gives them an understanding of what your situation looks like. And at the end, it asks for your social security number. You enter it, and then it pulls your most recent tax return. And then it takes your adjusted gross income from that document and then plugs it into this equation that essentially prints out what your monthly payment is going to be for the next 12 months. So that's the first application. And then that processes, and then you'll get approved for income driven repayment. And then during the application, you usually opt onto the plan as well. So that's step one, to get on the plan. Once you're on a plan, let's say that you get on the plan January 7th of 2022, and you just got on the plan. January 7th of 2023, so right now we're in 2022. So January 7th of 2023, you're going to have to do something called a recertification. A recertification is an online application that you have to do at a minimum once every 12 months, so once a year. And this recertification is very similar to the original application to get on the plan, but it's a little different, it's a little quicker, but it's very similar. But it basically is just updating the government and your loan servicer with what's going on with your life in terms of income, family size, and those other things that we talked about. And again, at the end, it asks for your social security number, it pulls your most recent tax return, and then your monthly payment in that year is going to be based off of the adjusted gross income from the year prior. So that's what you have to do every single year logistically to maintain your qualifications on the plan. Now, I'm just going to throw this in there. You have to recertify on time. If you don't, you will temporarily be put back on the standard 10-year plan where your payment's probably going to be a couple $1,000s, depending on the size of your loan. If you have $150,000 worth of loan, your standard payment plan is probably going to be over $1,500 a month. Probably going to be closer to $2,000. So if you miss your recertification, they're going to automatically default you back onto that plan for at least a month, and then you're gonna have to switch off, and then your interest is gonna capitalize. It's a mess. Just avoid it and recertify on time. That's how you maintain your qualifications on the plan. Now, the next side of this is when you're on the plan, let's assume that you went through a process where you mapped out all of your short and long-term costs, and you know what your monthly payments are gonna look like. You map those out. You know what your total cost is gonna look like, and you also know what that tax bill is gonna look like. And let's say it's a $80,000 tax bill. I'm using $80,000 because that's close to the average that we see within our business. Once you are maintaining your qualifications on the plan, separately from this, you need to create a this is my recommendation, is make a wealth accumulation savings strategy or savings plan for your loan forgiveness tax bill. And it's not as just simple. I know we were just talking about this offline, Scott, but this is not as just simple as just investing money. Like a Roth IRA is a really good thing for PTs to use because most PTs don't, they fall under the income threshold. So it's not going to be common that a PT is going to be disqualified from funding a Roth. And a Roth's one of the best places you can put money from a tax advantage standpoint. A lot of benefits, right? It's not as just simple as just saving money into that. And I think sometimes when I talk to people that are DIYing their own plan, they're like, well, I have this tax fund, I'm saving money to a Roth, so I think I'm good to go. And that's great. And they could very well be good to go, but there are different tax penalty and fee implications depending on where you're saving that money when you go to withdraw money from the account. So what we were talking about offline is that, again, you're not just you're not just creating an accumulation strategy, you're also creating a withdrawal strategy. You have to understand how money comes out of these accounts. Same thing as retirement planning. The biggest mistake people make when they do their own retirement planning is that they just focus too much on the accumulation aspect. The accumulation aspect is extremely important. That should get probably between 70 and 90% of your focus, but you have to understand the importance of withdrawals. It's not just about accumulation. It's all about how the money gets distributed out of these accounts when you're using that money. So if you have an $80,000 tax bill, it's really important that you create a very strategic savings plan to get you to that number and hopefully get you well over that number so you're not behind on things like retirement. Because again, these are 20, 25-year plans. It's a long time. And you don't want to be, let's say the average client that we see is 28 years old for PTs, some younger, some older. But that's the average that we see. So if you're on a 20-year plan, now you're 48, right? You don't want to be behind on retirement planning when you're pushing 50. So it's really important to make sure that you understand compounding interest and how to save in the right places. And also you want to know how you're hedging things like market or sequence risk, which I'm not going to go into detail, but whoever's listening, you just research it. It's not the craziest thing in the world, but you need to hedge sequence risk. It's really important because if you go to withdraw money from these accounts in a down market, you're selling funds at a loss, and that goes against everything when it comes to wealth accumulation.
Yeah, those are some really good pointers there. Well, Chris, thank you so much for taking your time and for educating the audience on all things financial planning and student loan repayment. I'd like to try to meet with you again, like we said, probably quarterly or so, and just get some updates and have some people ask some questions that they want to know about. Where can people reach out to you? Where can they find you if they have other questions or want to get on the books with you and chat? Yeah,
I mean, there's a lot of ways that you can find us. My email is just chris@varelafinancial.com. So that's probably the easiest way just to directly reach out. You could also just go to our website, which is varelafinancial.com, and there's plenty of sections to click and schedule just a quick 15 to 30 minute phone call to just discuss your case at a high level. It's a free phone call. There's no cost. And it's really just to say, hey, this is what I think high level you should do. This is how I think we'd be able to help. If you want to go ahead and do a consultation, great. If not, that's fine too. We'll part ways as friends. But the website is varelafinancial.com. And in terms of just getting good content, we do pump a lot out on either, you could just follow me directly on LinkedIn, or you could follow our page on LinkedIn, or we do have an Instagram where we put out a lot of really good content too, as well as Facebook. I don't really understand Facebook as much, we're just being honest, but Instagram, I think, is where we focus more of our content. And I'm also on TikTok just for videos. Yeah, I mean, social platforms is a really good place to find us and follow some of our content. Some of it is student loan related. Most of it is, probably 80% of it, 20% of it is not. But yeah, that's a good place to kind of just get some free content. But ultimately, if anyone's watching this and they are looking for individual guidance and individual advice on how to tackle these type of financial issues, the website or just emailing me directly is probably the best case.
Awesome. We'll put all those links in the show notes so that you guys can find them easily. But Chris, always a pleasure, my friend, and I look forward to talking to you again in a couple months.
Likewise, Scott. Thanks for having me.